Well, we've got lots lined up today on the show, including all of our guests who will be helping you out. So here are our team of experts. On the fundamental side, we've got G. Chokalingam. On the technicals, Anup Chandak, Kunal Bothra, Sarvendra Srivastav and Mandar Jamsandekar. And on the commodities side, Bharat Kumar will be with us on the show. Okay, let's get it straight then with Anup Chandak, who is now joining in on the show to chat about some technical trades. And G. Chokalingam is with us to help us on the fundamentals. Welcome, gentlemen. Anup, it's a day when really the markets are not doing a whole lot at all. I understand you've got some strategies. We'll get to that later. But what's the cue on the index?
Index, we feel that we had seen a sharp correction of around 150, 160 points on Nifty in last couple of sessions. On Friday, we saw a huge sell-off coming in. But what is comforting is that market is trying to find support at around 8070, 8060 levels. So from here, we can expect a sharp bounce, maybe towards 8300 levels again. And if market manages to cross 8300, 8280, 8300 levels, then we can see a swift up move towards 8500. But for all this to play, we will have to keep a stop at somewhere close to 8040 on Nifty, and on Bank Nifty somewhere close to 18,140, 150 levels on spot. If these two levels are guarded, then we can see a swift up move towards 8300 on Nifty and around 18,700 to 18,900 levels on Bank Nifty.
Walk us, Anup, through your picks.
We have 2-3 strategies playing out in our portfolio as of now. One is on Vedanta. Where we are expecting a bounce from current levels of 225 and the stock moving towards around 240 levels. One of the key reasons is that Vedanta has seen huge long position adding since expiry, and we had seen that Vedanta has already added 16% OI and with a 2% price rise since expiry. The recent 5-7 rupees fall in Vedanta was on the back of long unwinding, which is a normal process when the stock moves up. But we feel that from current levels of around 225, 227 levels, we can see Vedanta moving towards 235, 240 levels. And to play out Vedanta, one can look to buy a 225 call option for around 10-11 rupees and sell a 235 call option for around 6-7 rupees. A net risk of around 4 rupees a share in Vedanta. Whereas on the higher side, one can stand to a gain of around 6 rupees a share if the stock moves to beyond 235.
Anup, if you could also talk to us about the other two strategies on ONGC and Ambuja Cement.
ONGC, as we had seen that ONGC has been continuously rising from around 220 levels to 300 levels, and the stock still has a lot of long position getting added month on month near the expiry. We feel that the similar is the case in ONGC as of now also, and the stock should take off the recent highs it made at around 300 levels and move towards 305 to 310. So from current levels of 290, 292 rupees in ONGC, what one can look to do is again do a bull spread, maybe around of 295, 305 or 300 to 310 bull spread. If one does a 295, 305 bull spread, the maximum risk per share is around 3.5 rupees, and one stands to get a benefit of around 6 to 6.5 rupees if ONGC manages to cross 305 levels, which is very much a possibility as of now.
Okay, those are all of the top strategies. But what about Ambuja Cements?
Ambuja Cement, as we had seen that cement stocks has been correcting of late, and we had seen a correction of anywhere from 10 to 15% across the board in cement. We feel that Ambuja Cement has bounced back a little bit, 5 to 10 rupees in last few sessions, but this is majorly on the back of short covering, and the stock will continue its downward movement, maybe towards around 190 odd levels. So to play that out, we recommend buying 200 put and selling 190 put. The risk involved in Ambuja Cement is around 2 to 2.5 rupees, which is if you buy 200 put, it is around 4 rupees, and sell 190 put around 1.5 to 2 rupees. So a risk of 2 rupees for a gain of around 7 to 8 rupees in Ambuja Cement.
Oh, all right. Those are some strategies coming in. Them from Anup. Keep an eye out for all of those stocks.
Fundamentals seem intact. Do you think that the chart patterns of an IRB infra also are reflecting optimism? Good stock to hold in the portfolio, you think?
I think the bad has been done with IRB because of this no toll collection for last 25 days. post demonetization, and we also have a similar view that one should hold on to IRB and look for a 10 to 12% bounce from current levels. The stock is currently trading at around 188, 189. To me on charts, it looks like the stock can take very good support at around 177, 178 odd levels, which it recently made the low of. And from there, the stock is due for a bounce to 205 to 210 levels in next few months' time, maybe couple of months' time.
Hey, that's a thumbs up on the fundamentals and the technicals. Watch out for a target to the range of about 210 to 220, basically from our experts, and stay invested.
Anup, come in on RBL Bank. I understand it's a fairly new listing, but 320 is where he's bought it at, and while he's still, of course, holding on to some marginal profits, it has definitely slipped from those highs that it's off about 390, 400.
The stock has slipped from the highs it made around 380, 390 odd levels. 400 was on a spur. What we feel is like the stock will have good support at around 330, 335 odd levels. The stock is already up from his buying price by around 25, 30 rupees. What he can do is trail the stop loss rather than holding on with the same stop loss of 320. Trail the stop loss to around 333, 334 odd levels and try to prolong the trade, and the stock can easily move towards 370, 380 odd levels from current levels, but trail the stop loss.
That's the view coming in on the fundamentals and the technicals, so really a call that you need to take as to what the outlook is. RBL Bank can perhaps be held on to, according to Mr. Chokalingam, if the time horizon is extended. And Anup also gave us his views and levels to map out. Thanks very much then, Anup, for sharing with us your thoughts and top picks on the show.